Trump just fired the first shot in what could be the next great trade war. On February 1st, 2025, he slapped massive tariffs on China, Canada, and Mexico, and the financial world is losing its mind. Stocks are tanking, businesses are scrambling, and U.S. consumers, well, they're about to feel the heat. But why did Trump do this? Will it strengthen the U.S. economy or cripple it? And how are China, Canada, and Mexico preparing to strike back? Buckle up, because in this video, we're breaking down the good, the bad, and the brutal of Trump's latest trade war. Before we get into how this shakes up the global economy, let's break down what's actually happening. A tariff is basically a tax on imported goods, a tool governments use to protect industries, generate revenue, or pressure trade partners into making better deals. But here's the catch. Tariffs don't just hurt foreign companies. They jack up prices for local businesses and consumers too. Here's what Trump just did. A 25% tariff on all imports from Canada and Mexico, and a 10% tariff on Chinese imports. But what is the goal? Well, according to Trump, these tariffs will protect American jobs by making U.S. products more competitive, slash trade deficits with China, Mexico, and Canada, and put pressure on Mexico to crack down on illegal immigration. Sounds great, right? Tariffs don't exist in a vacuum. When one country imposes them, others hit back. And that's exactly what's happening. The reality is far from simple. As we've seen before, Trump's trade wars can have ripple effects. Back in 2018, he launched a trade war with China, imposing tariffs on steel, aluminum, and a variety of Chinese-made products. The markets tanked, businesses scrambled, and consumers felt the sting. But this new round of tariffs is more focused on immediate concerns, specifically trade imbalances and national security. With tariffs being placed on Canada, Mexico, and China, the U.S. is testing new waters. But this time, the stakes are higher as global supply chains are more interconnected than ever. And if you thought Wall Street would love this move, think again. Investors hate uncertainty, and markets just went into full-blown panic mode. Trump's tariff news hit the airwaves, and as you'd expect, the market did not respond kindly. The Dow, S&P 500, and NASDAQ all plummeted as investors quickly jumped to conclusions about what this would mean for the U.S. economy. Stocks dropped fast, and it wasn't pretty. But why the panic? Simple. Investors saw these new tariffs as a major risk to corporate bottom lines. U.S. businesses, especially automakers, electronics manufacturers, and retailers, are looking at much higher costs for imported materials. With a 25% tariff on Canadian and Mexican goods and a 10% hit on Chinese imports, companies like Tesla, Ford, and even John Deere are facing a stark reality: higher production costs. And when businesses pay more to build stuff, you can bet those costs get passed on to you, the consumer. These tariffs also stir inflation fears. As raw material costs increase, so do the final prices of goods. Could this be the start of a nasty price surge across the board? Looking at the bigger picture, the global markets are feeling this too. The Australian stock market is already seeing a decline, and their currency is feeling the pressure as well. The ASX 200 is down by about 1.2%, with iron ore prices set to face a hit as China's demand weakens. If China cuts back on imports, you can imagine that iron ore exports from Australia could suffer, which is a serious blow for their resource-heavy economy. Here is where it gets interesting. The ripple effect also impacts supply chains, especially when you factor in China's potential retaliation. They're already considering tariffs on tech exports, which could impact U.S. companies like Apple and Tesla. If this turns into a full-blown trade war, you can expect even more volatility. And that's not all. In the short term, businesses are tightening up, and the job market could face some turbulence. As companies deal with rising expenses, you might see layoffs or at least a freeze on hiring in industries that rely heavily on foreign materials. This uncertainty is leaving many to wonder. Is this the beginning of a bigger economic slowdown? The market's freakout is just a direct reaction to the fears of rising costs, inflation, and a potential global slowdown. With so many industries at risk, it's clear that the immediate impact of these tariffs will be felt far and wide. And while the Trump administration insists these moves are to protect American jobs, the question remains: are they the right solution or a giant gamble that could backfire? So, whether you're buying a new Ford truck, grabbing the latest iPhone, or ordering a John Deere tractor, expect prices to rise as manufacturers absorb the sting of these tariffs. Ford, Tesla, and Boeing, you name it, they're all vulnerable. These companies depend on critical imports like steel, aluminum, and advanced tech components. With a hefty tariff on these goods, they'll face higher manufacturing expenses. Ford, for instance, already struggles with high production costs, and these new tariffs could push prices on vehicles up, making it harder to stay competitive. Tesla, which already relies on expensive battery components, will see a rise in the cost of its electric vehicles, threatening its edge in an already cutthroat market. Boeing could be next in line, as they rely on aluminum and other imported materials to produce their planes. Higher costs mean higher prices for airlines, who in turn pass on those costs to consumers in the form of higher ticket prices or reduced service. And it's not just about consumer goods. Industries that depend on the global supply chain, like agriculture and manufacturing, will also feel the heat. John Deere, which sources components from around the world, will face increased costs on everything from engines to electronics. The ripple effect could make machinery more expensive for farmers and construction businesses, raising the overall cost of doing business across many sectors. But here's where it gets even trickier. These rising costs might lead to layoffs and stalled investments. Manufacturing plants could delay upgrades or expansions, while research and development projects might be postponed to save cash. But in the long run, the question is, will these protectionist policies create enough new jobs and industries to offset the costs? Or will we see a future where businesses are left scrambling to stay afloat? Only time will tell. But as it stands, the ripple effects on U.S. businesses and jobs are already starting to make waves. And it's not just the Fortune 500 companies who are feeling the heat. It's every worker, consumer, and small business owner in the country. Countries like Canada, Mexico, and China aren't the types to sit idly by while they're getting hit. In the face of rising tariffs, these nations will undoubtedly fight back, and the impact could be devastating for U.S. businesses, especially those relying on exports. So, how will the retaliation unfold? Let's break it down further. First up, Canada. For those who don't know, Canada is one of the United States' biggest trade partners, especially in agriculture. U.S. farmers have long relied on Canadian exports for their livelihoods, and these tariffs could hit them the hardest. In response, Canadian Prime Minister Justin Trudeau has retaliated with 25% tariffs on $155 billion worth of American goods as a countermeasure. But this won't just hurt U.S. farmers, it will ripple through the entire supply chain, raising costs for consumers in both countries. And let's not forget, U.S. agricultural exports like soybeans and corn are huge in Canadian markets. By slapping a 25% tariff on these goods, Canada is drastically cutting demand, leaving U.S. farmers in a precarious position, to say the least. Then there's Mexico, which is also a key trade partner for the U.S., especially when it comes to automobiles. U.S. auto manufacturers like Ford, Chevy, and Ram all rely on Mexican imports of auto parts and materials. Now, Mexico has decided to retaliate with tariffs of its own, so expect U.S. auto exports to take a hit. That means fewer cars being sold to Mexican buyers, raising prices on both sides of the border. And here's the kicker. Mexico has been known to push tariffs in creative ways, targeting specific models of cars and trucks that are heavily reliant on cheap labor from Mexico. In fact, if they decide to hit those manufacturers in particular, we could see higher prices for consumers and possible job cuts as U.S. automakers scramble to adjust production. But wait, it gets even more complicated when you bring China into the mix. China is a massive market for U.S. tech products, especially for giants like Apple and Tesla. Now, China has filed a complaint with the World Trade Organization and vowed to retaliate by imposing tariffs on U.S. tech exports. This means American companies that rely on Chinese consumers could soon feel the pain. For instance, Apple, with its extensive presence in China, could see tariffs placed on iPhones, Macs, and other products, forcing the company to either raise prices or absorb the costs. This would directly impact its profit margins, and by extension, its stock price. Similarly, Tesla, which depends on China for a significant portion of its electric vehicle (EV) sales, could face new tariffs, making it harder to stay competitive in the world's largest EV market. This wouldn't just affect Tesla's sales, It could disrupt its global supply chain and threaten its long-term growth. But the effects wouldn't stop there. Major tech firms like Intel and Qualcomm also rely heavily on the Chinese market, and a slowdown in sales could lead to stagnation in both innovation and market growth for the entire U.S. tech sector. As these countries retaliate with their own tariffs, the risk of a full-blown trade war is becoming very real. And this isn't just a problem for the U.S. and its direct trading partners. Global supply chains will feel the shockwaves too. In today's interconnected world, a disruption in one region can trigger a chain reaction that affects businesses worldwide. Raw material prices will rise, production costs will increase, and supply chains will slow down, forcing many companies to rethink their global strategies. What do you think? Will these tariffs actually help American workers, or are we headed for another economic disaster? Drop your thoughts in the comments below. If you found this video insightful, don't forget to smash that like button, subscribe, and hit the notification bell so you never miss an update on the latest economic shifts.